in your view, is this medicine working at all?
No, look, absolutely. I mean, the Bank of Japan is leaving nothing to chances. The Federal Reserve is starting to taper, but here in Japan, we're going to continue to keep pressing the pedal to the metal as much as it works, particularly these policies to counter COVID impact for small and medium-sized companies. Extending that until September next year is great news. And it also means that there's great coordination between Prime Minister Kishida, who's just launched another record fiscal stimulus, together with the Bank of Japan, continuing to keep the pedal to the metal, continuing to stimulate.
But don't we, at the end of the day, Jesper, have this law of diminishing returns playing out?
No, look, I mean, the reality is that, you're seeing some very, very good signs that the policies are actually working. Most specifically, you actually find that real estate prices in Japan, residential property prices here in Tokyo and the major cities have been increasing for 19 consecutive months. And remember, this is the first time in one generation that real estate prices, residential property prices are actually moving up. So you're getting positive wealth effects for the first time in one generation. And there's no question that part of that is because of the continuous stimulus by the Japanese authorities, the Bank of Japan included.
Yes, but when it comes to inflation, nothing to talk about. Given that the BOJ now says uncertainty is high on the COVID impact, when does it go back to that inflation target of 2%, or just forget about it for now?
No, look, I mean, the Bank of Japan succeeds by failing. I mean, look, for me here in Tokyo, for all of us here in Japan, it's a great thing because the purchasing power of the people keeps on rising. That's the good news, right? And the fact that, about 1/3 of the prices here in Japan are regulated by the government, so you don't have the pass-through of cost-push inflation, which is borne by the American consumer, but is not borne by the Japanese consumer. So from that perspective, the fact that you've got zero inflation is actually fantastic news.
The BOJ made a surprise move this week by, its market interventions. I mean, how do you think Kuroda can explain that?
Look, I mean, Kuroda is running a very intelligent policy of strategic ambiguity. They've got the budget, they've got the war chest to buy ETFs, they've got the budget, they've got the war chest to buy corporate bonds, they've got the budget, they've got the war chest to buy JGBs. Whether they do it or not, and when they do it, what's interesting is that over the last 12 months, it's really moved from certainty of Bank of Japan intervention towards strategic ambiguity, which is good news because it helps to keep the markets on their toe and actually helps to liquefy private sector activity.
I mean, fundamentally, it's a tough ask for the Bank of Japan to really get things going, given the demographic challenges facing the country. That's one part of it. And, that's something where you're not going to get demand to pull inflation from. You're going to get that from the people who are employed. And if the government and the central bank are going in tandem, you'd expect more pressure to come onto corporates from the government to pick up wages.
Yeah, and you're putting your finger on exactly the pulse, and that's the big challenge for Prime Minister Kishida. He's trying to now offer incentives in the terms of tax relief for Japanese corporations. If you hire more people, if you increase wages, we're going to give you some tax relief. That's new policy. We'll see whether it's going to be working. Personally, I think that you got to watch out for the market, in the people who are graduating from university. You actually see a very tight labor market. That's where the point that you made about the demographic kicks in. The war for talent for people in their 20s and their 30s is intensifying. That leads to higher quality of jobs, higher pay. And I think it's good news that Kishida, that the Prime Minister is actually trying, to incentivize that further by giving tax breaks for companies who pay who pay higher wages.
Yes, but also, on top of that, we've got a currency which has weakened significantly this year. That must be pleasing to the governor of the Bank of Japan.
Look, you've put your finger again, on exactly the pulse. I mean, the reality of the yen, a year ago, basically at around 100, 103, now at basically 113, 115, that sort of range. The fact that you've got this gradual depreciation of the currency is actually good news because it keeps the tradable goods sector, it keeps the exporters, very, very flush with money. And it's this sort of incentives, the tradable goods sector going for it, Japan becoming an attractive country here in Asia to establish headquarters. And I think you're going to see for 2022 as a big theme, more inward M&A activity, American companies, Asian companies buying into Japan to establish headquarters, to establish distribution hubs, possibly even establish factories here in Japan.
The weak yen is great, Jesper, you say, but how long will the weak yen remain weak? What assumptions are you making about the currency? How long can it support the economy?
Look, it's very interesting, right? Because, the forecasters have become very shy. Everybody, I think the consensus is that with the US tapering and tightening monetary policy, while Japan keeps on stimulating, the dollar should be a stronger currency, maybe 118, maybe 120. That's sort of the daring forecast. My personal opinion is, I actually think if this desynchronization, the Fed beginning to hike rates and the Bank of Japan doing absolutely nothing, we could easily see a return to 130, 135 on the dollar-yen cross.
So in the next 6 to 12 months, the biggest risk for Japan's economy would be?
Look, I think, the biggest risk externally is from the People's Republic of China, specifically China starting a currency war. If the People's Republic of China were to be forced to devalue its currency in order to stimulate, to cushion against the domestic slowdown, that would be a big external risk. Domestically, the biggest risk here is that institutional investors go on a buyer's strike. And it's very bizarre because the one thing that we still have not seen private insurance companies, private pension managers, private retail individuals stepping up and investing into their domestic stock markets. That's, continuation of the bad demand and supply situation for the Japanese stock market. That's the biggest risk in 2022.
Just want to have a look very briefly here at the world of crypto, Jesper, and of course Monex is involved there. What about the FSA? What's it likely to do? Change the way that the whole crypto space is regulated?
Look, I think that the FSA, initially 5-6 years ago, as you remember, was very aggressive and say, hey, go for it. Then they tightened it in. And now the good news is that they're very cognizant that Tokyo does actually have an opportunity to become a major crypto center here in Asia Pacific if it does have the proper regulation. So watch that space. I think the FSA, is not like the People's Republic of China. They don't want to squash crypto. And I think in 2022, we are going to see concrete developments of a stable coin, possibly even backed by the Bank of Japan and the Ministry of Finance together.